Good evening. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Wednesday, and we are now on the 17th of June, 2020, just after 5 p.m., so we've literally just opened in the markets. You can see that most of the stock indices opened a tad lower just now. Metal markets a fraction lower as well. Dollar's not open, but you're getting a bit of a rally off the euro that dropped down just within a couple of ticks of the 18-day average, so I was looking for support there, and it is, at least early on, showing itself. Energy prices a mixed bag. You know, we didn't get much of a bounce with a very friendly EIA number, completely different than the API number yesterday, which was over a 9 million build, and very minor build here, nothing near there, about 1 million barrels. So interesting that we didn't get further bounce. Maybe the markets are just saying the $40 level's good, and up in the $37 level in crude's good too. You do realize these prices will bring out American producers. So they're probably hedging and they're probably watching what's going on in the market. If they have the cash, I think they're going to produce. Bonds and notes very, very flat right here, not a lot going on. So as we take a look at the S&P 500 for the week, we're up 78.5 points. So 2 days left. We've got a cushion going home. As you can see, the market still has that pattern of a high here that's still under that one, but we have not come back since this break low to break through and get through prior break low closes on a weekly basis. Just hasn't happened. That's interesting. When we step over to the daily bar chart, you can almost see the sideways action. You can look right here and down here, and you're trading right within that range. What else? We have a downtrend at work in the theory of what the swing line is. The swing line looks for patterns that give you what a trend is. A downtrend is lower highs, lower lows. An uptrend, higher highs, higher lows. And no trend has a higher high and a lower low in some sequence. They'll go back and forth, but they're not a stepping ladder. Well, you see that right here, you've got now lower highs, lower lows. So the trend turned down. What would break that pattern is taking out the highs of 31.56 and a quarter, which was the high of Tuesday. So that's what I'm looking at right now. What about where we're at in relation to the 18-day average? Because what happens is I use the 18-day average to filter the swing line. So if the swing line is pointing down, but prices are trading over the 18-day average, I say the bias is up, the swing line is down, the two counter each other, you have nothing. And that's where you're at right now. Because the market is trading over that 18-day average, the bias stays up. If the market gets under the 18-day average, as long as it's under it, I think the pros come out selling, and I think that their stop would be 31.56 and a quarter. If the market can't get under that 18-day average and gets over 31.56 and a quarter, well, then you already are over the 18-day average. You'd have a pattern of, even if you took out today's low, you could end up with an outside day up. So you've got to understand what that can mean. So always do pre-planning. Think of the what-ifs on the trade. And as I said, going home tonight, well, as I keep looking at this, nobody has an edge. The Bollinger Bands, this would be, if you broke down, a potential support zone along with the 200-day average. If you went over the 31.56 and a quarter, I'm looking for a big resistance point at 32.21, the upper Bollinger Band. Seems to me we're just stuck right here. In terms of momentum, confirmation that we're stuck. Do you disagree that it's just drifting sideways? So now we get to the Nasdaq. We know this has been the strongest of the markets. It's still in an uptrend. It's keeping the pattern of higher lows and higher highs. I continue to look for massive resistance each time it hits a Bollinger Band. Yes, it can sneak through it, but 95% of the time it's going to pull back. I think the pros are bullish. However, big however, you're overbought as can be. Any readings over 70 in the slow stochastic where you're not going sideways over 80 with both the K and the D lines, the red and the blue, that's an overbought condition. A lot of systems negate their buying when the market's overbought or oversold. I believe that that's the case right here. As we come into the Dow, we have nothing. We have a market with a lower low, a higher high, and whipping itself back and forth against the 18-day average. Again, momentum is flat as can be. And in the Russell, flat momentum, trend down. So you've got a little bit of everything going on here, from the Nasdaq up to the others down. Let me stop that for a second.
Wednesday, June 17th. Well, today was certainly...
Sorry about that. I left on a speaker. That was, by the way, that brief point out, and I'll edit most of that out for you by the time you see this. That's our broadcast out of our charting service. Remember what I told you? We broadcast all the time, and we give traders ideas as best as we see them in the market, or an idea of the marketplace. But in the Russell, let's get back to what I was saying. You've closed today under the 18-day average. You're still trading under it. So I think the pros are selling at the 18-day average. I think their stop will be over 1481.60. I think they'll look to see if they can get the market down to the 100-day average. It's the closer between that and the Bollinger Band, and I think they'd be satisfied if they can get that done there. What would make them wrong? Getting over 1481.60. Now, here's the interesting thing. If you were to take that number out, you've already tonight gotten to 1420.40. You haven't quite taken out this 1480.80. Even if you did, you'd have to have an outside day up. Then, maybe you can get to the upper Bollinger Band, but I'm not looking for more than that. A lot of whipsaw action right here. In the VIX, flat momentum. No surprise. With everything else flat, why would that be different? Pattern is still bullish. Higher lows, higher highs. The pattern turns down if you break through the lows of Tuesday, which were the 2870 level. That would give you then lower highs and a lower low. I don't know if it would close under 2781. If it did, it would be bearish, and that would be a sign of what? That maybe the stock market, if that's going down, will want to go up. If you don't take that out and you move back up, the resistance is 3313, which is the upper Bollinger Band. And right now, the bulls have control of that market. In the T-bonds, remember what I told you? I think this market's going to get stuck here at this 18-day average. We are stuck right there. You've got to be fearful that if you drop down in this market, that how far can you go if the Fed wants to take notice and say, okay, we don't want yields that high in that part of the curve yield. Big problem, because they can cap it. They have the power. You don't fight the Fed ever, 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 ever. We don't know what they'll do. Are you trending right now? No, you have a higher high and a lower low, and you're stuck on the 18-day average. What about in the 10-year notes? The same identical thing. You've got a market that's got a break low here, a higher high here. You're stuck at the 18-day average and momentum flat and overbought at the same time. You could get a sell signal if the market got under 138.07 that could call for a break to the recent low area here, which would be 137.09. What about to the upside? No signal to turn the market at this point friendly. What about the dollar index? When you lost the embedded reading, and I want to get you right here when this occurred. Here, still both numbers, yellow and blue, under the 20 level. Here you lose it, right? When you lose it, what are you looking for? You're looking to see if the market can make a run to the 18-day average of closes. Tell me that isn't underway. You're close enough now. You got within 10 points that I consider it okay. I'd love to see it tomorrow, just knock it off just for the sake of it. I don't know if it can do it. Now, if you were to close over the 18-day average, you might get bullish. I don't think the long-term charts, though, are bullish. I think the short-term are in a correction, and I think the longer-term charts, which we'll take a look at on Friday, aren't quite in agreement. In the eurocurrency, all I've been looking for, and I was frustrated it wasn't happening quicker, you lost the embedded reading. That should mean price and the 18-day average make a run at each other. Here's the market. Get your rally. And as far as I'm concerned, you're there. So I'm done thinking about that. Now it's a question of what it wants to do next. Why did the yen go up today? And why is the yen suddenly overbought in an uptrend? I don't know what this market knew, but generally the yen doesn't just move like that. The rally today was one of 16 points. It's not large, not by any stretch, but still a nice rally that the market had. And the pattern turned bullish. Now, what would turn it bearish? Let's look at both sides of the equation. First of all, it's too overbought, in my opinion, to catch a lot of new traders. You'd need an event. I don't know what the event would be. It would be obviously a shock of some type. It could be additional COVID cases out of China. It could be something in the US or elsewhere in Europe. I don't know. That would then, if that occurred, possibly kick the market up to the upper Bollinger Band, but I'd look for pretty stiff resistance at that number. What would turn the trend down? Take out this 93.04 level and close under the 18-day average of 92.89. Then you'd have lower highs, lower lows. I don't know what momentum would have done at that point. It'd probably still be in overbought territory, but overbought, getting new sell signals doesn't scare. In other words, it doesn't filter out the programs that might be filtered to go short markets. You've always got to understand where they're at and try to understand how they're writing into those programs. I wish I had my life over. I'd have written algos. There's no question about it, but I'm a little old to start doing all that now. As you take a look at where we're at here, in looking at it, I can argue that we've got an attempt at a higher low, lower highs. That's all that I could say on it. You're oversold. I don't see anything there. The differential between WTI and Brent at about $2.56. The market got over that 18-day average back here, and it really hasn't gone back under it. It got over it on this last Friday, and so far, it's been able to stay over it for 4 days, and that's interesting in itself. And if you look at the Brent, are we trending? No. You've got lower highs and a lower low. So yeah, I can call the trend down, but it's not confirmed. You're over the 18-day average. So the two fight each other. Momentum is turning down in the market. You need to close under 39.39 to get bearish this market. This is no bargain up here. In the WTI, you've got the same thing. You have lower highs, lower lows. Momentum is clearly turned down. Now, momentum often turns before price does. Is there anything that could turn bullish here? Well, there isn't both. If you were to take out the highs right there of 39.36 or 41.66, you'd turn the market in terms of the swing line up, the bias would be up, and you wouldn't be fighting necessarily with whatever the momentum is doing. We'll see if the markets want to follow suit on that. It's a hard energy market right now. As we go to the gasoline, you're very overbought. I don't think you attract new trading to buy when you're overbought. That doesn't mean this. In order to become embedded bullish, you have to first get overbought. From there, you embed. Do we understand there's a stage sequence? The chart cannot and will not just become that. It'll go like it did here. It won't become embedded. First has to get overbought to lock in the embedding. Got that? Bearish, same thing. So it's a stage, but you're nowhere near it. You don't have both numbers over 80. So you're not even close to doing it yet. In the nat gas, you're bouncing away from the 2 days underneath the lower Bollinger Band. You only stay under a Bollinger Band 5% of the time. Count each successive day, each day starting with it, is taking away one of those 5 percentage points. So right here, I would give the market on this day coming in, the next day, a 96% chance of now getting back over the Bollinger Band. 96. 97% chance, because now you're 2 days in a row. I've taken those 2 from the 5, take away, it's a 3% chance of staying under, 97 of not. Market gets over it today, game over. So now you're into a new count. Does that make sense to you? And you'll say, well, what if you go beyond 5? So what? Just a sign of further strength. Go in and count how many times you go beyond 5 staying out of Bollinger Bands on a futures contract that's the lead contract. Don't show me the far back contracts. That doesn't have enough volume and open interest to be meaningful to me. and you'll see what's going on. What else do you have? You have an embedded reading locked in here. I think the pros are going to sell the heck out of this market if they get a rally in it. That's what I think the setup is saying. That's why it's moving back in there, but just my guess. I don't know if they will or won't. So I put together the combo that I talked to you about. So in the morning, you start off with me at 5:40. I record everything I see, and I've got it published for you. Typically, by 6:30 in the morning, you're getting a video from me that covers 40 futures charts right now. I will give you a taste to start off the morning with what I've seen in Europe, Asia, the US in terms of news, and I do publish the news for you right in the video. And then we start talking Turkey about all these different parts. I say approximately 40, sometimes I add charts, I don't take them away. In the ETF category, I'm up to 34 charts right now, maybe 35. I added one today. So my IT department gets mad because I just keep going with it. And I'm going to until I get to 40. What does it cost for both of these videos together? Introductory offer, $16.90. A price break, because if you add the two prices together, if you take both, I'm giving you a 10% discount. So it's $28 every 30 days. And no, you are not in a contract with me. You can stop it anytime you want. We can even address it where you might want one video, not the other, and we'll be able to work that out with you as well too. It's very, very simple. I don't want to get this really more complicated than I've got it. I'm pretty comfortable that this is where it's at. And I can only tell you, my biggest growth factor in the past COVID period has been these ETF videos. They have exploded very quickly, and we're getting a lot of views on them and a lot of subscribers on them. So you might want to take a look at it. How do you do it? Go to our website at www.iraepstein.com under the word research at the very top. If you click either the morning subscriber video or the ETF, it gives you everything there. You see the combo package. You can do it, or you can buy either one of them separately. Your call. I'm Ira. You have a great day, and I'll see you tomorrow.